Hello and welcome to this educational presentation where in this brief video I want to talk to you about the perfect trading strategy for volatile markets. Most traders have a very difficult time trading volatile markets, and I'll share with you why I feel that is. Let's look at this example, this older chart of IDXX. Let's say you were interested in this stock, but perhaps you think it's overbought. It's already gone up too much and you don't want to get in right now. In fact, maybe you go to that trading room and the person in there says you should sell this. So you decide to sell the stock. And we're going to tell you right now, in today's presentation, I'm going to show you why you would not have sold that. And actually, you would have actually bought on that very same bar. Because with this volatility strategy I'm going to be sharing with you, you could have potentially captured upwards of 62 points. You see, this is why a lot of traders fail, because they don't understand how important it is to recognize this volatility. So today we're going to be talking about the perfect trading strategy for volatile markets. And everything you're seeing today is displayed and is one click away on our platform, the PTS Primo charting platform. This is the educational platform I developed and designed with Pro Trader Strategies that actually teaches you how to trade. So welcome, my name is Steve Primo. I'm the president and founder of Specialist Trading. I've been trading now for 47 years, almost 5 decades. I started my career on the floor of the Pacific Stock Exchange. I was on the trading floor for 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. A specialist is someone who made markets, roughly about 50 or 60 stocks. So if you wanted to buy or sell a particular stock, you would call up your floor broker. He would walk up to the trading specialist and ask to either buy or sell that particular equity. So I made markets in IBM, US Air, Waste Management. I made markets during the crash of 1987 and the bull market that followed. So in my nearly 5 decades of trading, I've seen just about everything there is imaginable, everything under the sun. So I know what works in terms of consistency, and I know what doesn't work. That's why I formalized Specialist Trading with one goal in mind, and that was simply to teach traders how to trade. And you'll see that in this brief educational video. Now, before we begin, as always, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this volatile trading strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are an educational company, all examples are strictly for educational purposes only. Now, another way to get education from our company on a daily basis is to follow us on Twitter. There's our handle right there. I would suggest copying that down, because every day I post upwards of 5 or 6 different examples of signals that our methods have generated to little bits of financial wisdom. So there's lots of great free information on a daily basis. Please feel free to follow us on Twitter. Okay, and once again, we are first and foremost an educational company, so what we don't do at Specialist Trading is tell traders what we think the market's going to do, or tell them what the perfect time frame is, or tell them what to buy or what to sell. It's our opinion as an educator that that's up for you to decide. So my goal as an educator, my goal as a mentor, is not to trade for you, but to teach you how to trade with a specialist edge. This is the same edge that was taught to me by my mentors on the trading floor some 47 years ago, and what has sustained me now for that amount of time. Hopefully it will do the same for you. Okay, so let's begin today's educational presentation, and we're going to be talking about a great method we call Strategy 3A. Let me share with you some of the highlights of this particular method. It's a continuation strategy, meaning it's already looking for an established trend. We're just jumping on board the continuation of that trend. It does this by using a unique Bollinger Band setting. I'm going to share with you what that is in today's educational presentation. Now, it's designed to trade these quick, powerful trends. The beauty of Strategy 3A is you can apply it to any market, any time frame, and any direction. Now, with all of our methods, we always ask our students to learn the strategy first, like the back of your hand. So paper trade first. I know a lot of you, your eyes will light up once you get the rules to this method, and you'll be jumping in way too quickly. Please paper trade first so that you fully understand the process. Our edge with all of our strategies is consistency. Now, I know a lot of traders think consistency means that there's an abundance of winners. Well, sure, it can mean that, but it also means that there will be losses from time to time. So a consistent method has a 2-step forward, 1-step back approach, meaning that the 2 steps are the winning trades, the 1 step back are obviously the losing trades. That will happen from time to time, but that's what you want in a consistent method. Okay, let's talk about Bollinger Band settings, all right? Now, normally, if you're not familiar with Bollinger Bands, they are three bands. It's an indicator with three bands where the first band is simply the moving average. This is the band in the middle. It's a 20-period simple moving average. And the upper band is set at a deviation of +2. The lower band is set at a deviation of -2. So this is the distance above and below the 20-period simple moving average. So if you apply the standard Bollinger Band on any chart, it would look like this. The red line is the 20-period simple moving average, and then you have the bands above and below. All right, it's a very fine tool. We're going to alter it a little bit, and we usually have this proprietary setting for our members of the course who have paid for this course. Actually, I'm going to give them to you for free today. So these are the standard strategy settings that we use for strategy 3A. All right, we're going to leave the moving average the same at 20. But the upper band and the lower band deviations are going to be set differently. We're going to go down to fractions. So the upper band deviation will be set at +0.382. The lower band deviation will be set at -0.382. Okay? Now you should be able to do this on your platform, whatever you're using. If not, please go to your tech support, ask them to be able to adjust this for you, okay? But we're going, once again, the upper band is +0.382 and the lower band is -0.382. We're leaving the moving average the same at 20-period simple moving average. Okay, so if we look at the standard settings, let's look at the proprietary settings for strategy 3A. Okay, we're looking at the same chart, but see how things change. We see how we have a much smoother way of applying this. This is going to help us with our entries for strategy 3A. All right, so here are the 3A buy entry rules. And let's take it step by step. Step 1, obviously plot the proprietary Bollinger Band setting on your chart. And remember, it can be any chart, any time frame. So as you look at this older chart of Tesla here, we apply, once again, thinking that it was overbought. On our platform, click on Strategy 3A. In the drop-down menu, click on Indicator. And there we have the applied proprietary Bollinger Band settings. Okay? This leads us to step 2. Now, we want to see 5 consecutive price bars close, either on or above the highest Bollinger Band. So if we look at the chart once again, we see here that we have, okay, price bars are below, but now we have a total of 1, 2, 3, 4, 5 closes above. Now remember, they could close on this high Bollinger Band, which would be right here, but we see that all of these have closed above. It's okay if it's touching or intersecting the Bollinger Band, as long as the close is above, and we have 5 closes above. So now this leads us to step 3. We're going to enter to buy when price trades 1 tick above bar number 5. Okay? So we see here, here's bar number 5. You can place a little line right there. We have this on our platform where you know exactly where to enter. And once it trades there, you notice I didn't say it has to close above there. All it has to do is trade there. That's our entry. So we wait. Okay, didn't trade on the next bar, but we simply wait. And right there, that would have been your entry. And look what happened. Tesla went up 115 points in nearly 2 weeks. See how simple that was? It's a continuation strategy where you're jumping on board and continuation of the trend. Now, let's look at the sell rules. They're basically the same thing, just turned upside down. First thing we're going to do is plot the proprietary Bollinger Band on any chart, any time frame. In this case, we're looking at an older chart of Roku, ROKU. Okay, obviously it's been going down. Someone would say, hey, Steve, this is a reversal pattern here. We opened much lower on a gap down, and now we closed at the high level. But once we apply, even though you thought it was a reversal, once we apply the Bollinger Bands, click on Indicator on our platform, we see that price is below. So what is that telling us? Well, we go to step 2. We're looking for 5 consecutive price bars that close either on or below the lowest Bollinger Band. So here's the lowest Bollinger Band right here. All right, we are closing above. Now we close within the realm of these Bollinger Bands, but here we have the first price bar, and then we have a continuation of price bars. In fact, a total of 5 continuous price bars closing below the lowest Bollinger Band. So this will let us know where to enter. We're going to enter to sell or to go short or to buy puts once price trades 1 tick below bar number 5. Does not have to close there. You notice I underline trades. So We see bar number 5. This is where we must close below. For the first 2 bars, it didn't, but then look what happened. We traded below. Excuse me, we must not close below, we must trade below. So we traded below there even though we closed above, and we fell 45 points in the next couple of weeks, all right? So this is how you capture volatility. Now, what happens when the trend changes? Well, we just reverse trend. As we can see here, it kind of bottomed out and started to go back up, and now it's trading within the realm of the Bollinger Bands. But what do we have here? 1, 2, 3, 4, 5 closes back above, right? So now what the market is telling us, not some guy on TV, not some guy in a blog or in a trading room, what the market, the chart you're looking at, is telling you that it wants to go higher. So we can stop and reverse and use the same format to go long now. We're going to buy if it trades 1 tick above. And look what happened. You would have bought here, but you still could have captured 25 points in the next 2 days. So you see how simple this strategy is, but how powerful it can be as well. So let's look at some more Strategy 3A examples so that you can get it under your belt and you can fully understand the process. But please remember, these examples are for educational purposes only. Always invest in wisely, and we require that all of our students first paper trade before applying real funds. All right, here's an older chart of Marvel. Looks like absolutely nothing is happening, right? Kind of just going sideways. Once we apply the proprietary Bollinger Band settings, well, we see, okay, we're trading above, then trading back below, trading above, then closing back below. So nothing here to take advantage of Strategy 3A until this point right here. We have a total of 1, 2, 3, 4, 5 closes above the highest Bollinger Band. So this is setting up for a buy signal. Okay, so we can't buy at the market. We have to wait for it to trade just above here. So let's see what happened. Well, the very next bar it did. All right, in fact, it even closed above. So we're now long Marvel, and that's our entry point. 20 points in the next week or so. Now, in the course, in the class, we teach you exactly where to place your stop, a multitude of different exit points, also different entry points as well, and different stop placements. But here is the most basic way to trade Strategy 3A. Here's an example in TMUS, all right? Kind of looks like we're going up, then down, then back up. Not really sure what the trend is. But once we apply the Bollinger Bands, we see that, well, it appears that we're kind of sloping lower. Now we're looking for 5 consecutive closes below to go short because we're not even above the highest Bollinger Band. So we have 1, 2, 3 closes, but then we close back above, so this is not a setup. But what do we have here? 1, 2, 3, 4, 5 closes below. Now it's okay if it touches the Bollinger Bands. We're just looking for the close. So we have 5 closes below. So we're going to go short if we trade below bar number 5. So on the very next bar, yes, we traded below. In fact, we closed below. So we are short TMUS, and that's where our entry point was. We fell 15 points in the next week. Let's look at Charter, okay? We have a buy setup here. Most traders would say, gosh, this is just too high. I can't buy at these high levels. But remember, the market is telling us what it wants to do. Our job as a trader is not to decide if it's overbought or oversold and not decide what the earnings are. We don't have to worry about those things. Our job is just simply to listen to the market, find out what it wants to do, and then jump on board. Right now, it's telling us if we trade above this high, above bar number 5, it's telling us it wants to go higher. So our job is to jump on board, which we did 2 bars later. We entered right here, even though it closed lower. But look what happened in the next 2 to 3 weeks. Up 35 points higher. What would have happened if you had missed that, or if you had even shorted it thinking it was up too high already? As we look at BIIB, we have 5 closes below, even though we were touching and intersecting. The close is all that matters. Here's bar number 5 to go short. We entered to go short, and even though it's been going down for a good nearly 2 weeks, you still could have captured 15 more points selling this. All right, here's a buy example in SNPS. As we can see, 5 closes either on or above. That's all that matters. This bar closed on the highest Bollinger Band, but the rest closed above. So this is our buy setup. Nothing happened on the first day, but we're still waiting for it to trade above there. Nothing happened again. All right, so we're still waiting. We haven't entered into the trade yet. And for 3 days, we've been sitting waiting. But look what happened now. Gaps up, we would have entered, and in 2 days, we could have potentially captured 50 points. As we look at Qualcomm, here's an older chart of Qualcomm. All the bars are completely below the lowest Bollinger Band, all right? So right here, we have our entry, and right here, we have another entry. But how would we have taken advantage of this trend change? Well, we just do the count. Here's 5 bars. There's our entry. We could have potentially captured 16 points to the downside. And then we have another 5 bars here where we could have entered and captured 9 points. So potentially we could have captured 25 points. Remember, in our course, we teach you the exact exit points so you can take advantage of this wherever you like. Now let's look at some other markets and some other time frames. Here's a 4-hour chart of the dollar yen. Okay, we're kind of intersecting the Bollinger Bands until we have 1, 2, 3, 4, 5 closes below. Here's our entry point to sell the dollar yen on a 4-hour time frame. After the second bar, now we can go short 650 pips in the next roughly week or so. Not a bad little trade, right? That's a 4-hour chart. Let's look at a weekly chart of the spiders, okay? So we can use this as a directional tool for the overall market. We have here the first bar that closes above, and then we have a total of 5 more bars, okay? So this is our entry point. Now remember, you don't have to buy the spiders. What you could do is say, well, listen, if we trade 1 tick above bar number 5, that's basically telling me that the market's going to go higher. So I don't need to buy the spiders. I can use this as a directional tool telling me what the market's going to do and go long another stock or maybe buy some options. Either way, that would have been our entry point. Even though it didn't close above there, that's okay. We still entered. 40 points in the next, I would say, couple of months. This was a weekly chart once again. Now that came out to 1,500 Dow Jones points in the next 2 months. Here's a weekly chart of Peloton. We all know the horror story, what happened in Peloton. Let's go back to 2021. All right, a lot of people were left holding the bag of this stock. But if you had had strategy 3A, you would have known that a sell signal was generated. So you didn't have to necessarily sell this to go short. You could have used this as an opportunity to exit the stock roughly when it was trading at 80 or 90, and you would have saved yourself a good 80 points. Here is a daily chart in ODFL. Okay, once again, it looks like it's going straight up. Let's go through the process, all right? You may think it's overbought because it made some type of reversal here. It opens higher and closes lower. Maybe that guy on TV is telling you the earnings are going to be terrible. You've got to sell this. That's why it closed so much lower. Well, what is the market telling us? Remember, we don't listen to outside sources at specialist trading. We only listen to the source, which is the chart in front of us. What's it telling us? Well, one of the best ways to listen is to apply the proprietary Bollinger Band setting. If you had listened to the guy on TV, you would have sold right here, right? And for one day, you felt pretty good. But what happens when we apply the Bollinger Band setting? Well, what do we have here? We have a total of 1, 2, 3, 4, 5 closes consecutively above the highest Bollinger Band. This one closed right on, but look what happened. So where you might think that, oh, the earnings are terrible, I've got to sell this, this is actually a buying opportunity as long as it trades 1 tick above bar number 5. So let's see what happened. Well, yes, it did trade there. So you've entered where everyone else on TV was saying, no, you've got to sell this. And you could have potentially captured 85 points. This is why we don't listen to things such as news at specialist trading or what someone's saying on TV or what economic report comes out, because the market always tells you in advance what it wants to do. Our job is simply to listen to the market. Okay, so let's recap what we shared with you today. Strategy 3A highlights. It's a continuation strategy. We're looking for a continuation of trend and we're jumping on board. The way we do this is by applying the unique Bollinger Band setting, which I taught you today. Strategy 3A is designed to trade those quick, powerful trends that you can apply to any market, any time frame, and any direction. But please, now that you know the entry rules to Strategy 3A, do not jump in and apply real funds. Please paper trade first. That is a requirement. All of our methods are extremely consistent, but that is an awareness that you will have a loss from time to time. So please paper trade first so that you understand the process. Now ask yourself, do you think this strategy can help your trading for the remainder of the year? Well, I think your answer is absolutely yes. So for that purpose, we have a great special offer for all of you watching this video. We're going to offer you our Secrets of a Stock Exchange Specialist training sessions. It's just 3 hours of trading techniques plus a full-fledged strategy. Some years ago, I was asked to be the head speaker at a traders convention in Denver, Colorado. And what they did was record my 3 hours of speaking. And in this presentation, I talked about many more high probability trading edges that you could use. I talked about which indicators you should not be trading with. I went into the detail about the difference between a system versus a strategy. I shared with you the #1 chart pattern that you should always be identifying. How to be on the right side of the markets as opposed to the wrong side of the markets. And many of these edges and techniques I shared in this 3-hour video, you can apply to any market, any time frame. But here's the best thing about our Secrets of a Stock Exchange Specialist video seminar. I went over the complete rules to strategy #1. This is one of our premier pullback strategies. Now, if you're not familiar with pullbacks, they are designed actually the opposite of what I just shared with you today. Today, I shared with you a continuation method where we're jumping on board a rally or a trend that has already taken off. Well, pullbacks are the opposite. We're looking for a sell-off in an overall uptrend. We're looking to buy at lower levels, or we're looking to sell on a bounce or a rally in an overall downtrend. Let me share with you some examples here. Here's another chart of Meta. All right, here's pullback strategy #1. Most traders would say, well, this is a downtrend, Steve, so I don't want to be doing anything here. But pullback strategy #1 actually generated 2 buy signals right towards the low of that sell-off, and you could have potentially captured in 3 days this nice, large, big gap opening. Let's look at another example. Here's a 4-hour chart of the euro-yen, okay? Most people would say, wow, this has taken off. Look at this. Look at all these upward closes on a 4-hour chart of the euro-yen. This is definitely an uptrend. But strategy #1 deemed that the overall trend was down and generated 2 sell signals, and you could have potentially captured this large loss in the euro dollar. And then lastly, once again, you can use this on any ETF or even any indice. Here's an example of the Dow Jones Industrial Average where you think there's maybe a sell-off, but this is actually a pullback. 3 buy signals were generated right here towards the lows of that pullback. And you could have used this as a directional tool to tell you what you think the market's going to do, whether you should be investing or not. That would have been a wise idea because look what happened to the Dow Jones after that. Okay? We had 3 buy signals set up through strategy #1, and the Dow Jones went up 2,000 points in just 2 weeks. I'm going to give you all of the entry, exit, and stop placement rules to pullback strategy #1 in this course. Okay, so it's jam-packed with 3 hours full of trading education that I've accumulated in my nearly 5 decades of trading. So let's break it down. The entire sessions in the strategy #1 course normally cost close to $1,000. That's how much information is in there. Here's what we're going to do. For a limited time only, we are going to be offering this to all the attendees of this video and watching this for a discount price of $37. Think of that, $37. You can't even go out to lunch, sometimes even by yourself, for less than $30 or $40 these days. But for $37, you're getting almost close to 5 decades of information, techniques, methods, and strategies that I've accumulated that can really help your trading, okay? Remember, this is for a limited time only. You owe it to yourself to take your trading to the next level. Here's how to take advantage of this great offer. Contact my sister site, Pro Trader Strategies. You can call them directly at area code 310-598-6677. They can take your order for the $37 package over the phone. Now that link you see at the very bottom is the link that will take you to the info page. You can also sign up online if you'd like. Either way, I would feel the simplest way is to contact Pro Trader Strategies. They're never going to try and sell you anything else. They'll give you information. They're very flexible, and it's the quickest and easiest way to take advantage of this deep discounted $37 offer, okay? As we close, I just say thank you for watching this short video. I hope you learned something today. I really hope you see how just listening to the market and having a sound basic method can elevate your trading. So as you take one last look at our disclaimer, thank you so much for watching this video. I wish you all the best of luck, and I look forward to all of you becoming students of mine in the Strategy 3A course. Thank you so much. Hope to see you in class. Bye-bye.